Today's cardinal lesson is about life insurance, and specifically comparing the difference between term insurance and whole life insurance. And when we're talking about this issue, I've delivered personally over 100 checks to beneficiaries. I've been in the life insurance business a long time. And when I've done that, I've never had one person ask me any questions about the actual policy that their person had, or their father or mother or spouse. I haven't asked one question, and specifically they never asked this or have any curiosity. Was it term insurance or was it whole life? Because when the life insurance policy is doing exactly what it's supposed to do, which is paying a large sum of money to the beneficiary right after a person dies, it doesn't matter. But it matters big time depending on what phase of life you're in, where you are, and where you're when you're purchasing life insurance or considering purchasing life insurance. You need to understand these two types of coverage and what they're for. So I'm going to give you as an example. My son, who's in his early 30s, has been married a couple of years, and they're expecting their first child and our first grandchild. And what Dad and future Grandpa did is I helped them pay for $250,000 worth of life insurance on each of them, 30-year term. And it was amazing that it was about $300 a year on each of them, and that's a guaranteed premium for 30 years. So that's going to take him all the way to about my age in his early 60s, and her the same. And it's going to provide them a large amount of coverage. Now, more than likely, and the life insurance company knows that, they're young and they're in good health, that neither one of them is going to die. And so term insurance is designed to create a large amount of protection for a very low cost, and then it's got an end to it. Okay? And then whole life is pretty easy to understand in the sense that it's everything, every kind of life insurance policy besides term insurance. It has no term, or its term is the length of your life. So it's in force for your whole life. Now, most of the folks that we deal with and that we're writing for, people that are reading my books, people that we're doing financial planning for, people that are buying Medicare supplements from us, they're at the stage of life or the phase of life where they're going from the working years and the child rearing years to the retirement years. And they still have life insurance needs. And many of them think, well, why do I need life insurance when I'm retired? My kids are grown, the house is paid for, blah, 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 blah. Well, for starters, if you're married, there's going to be a big loss of income at the first death. So if people are collecting 2 Social Security checks going on in retirement and one of them passes away, the other one lives on with just one check. Big loss of income. Same is true with a lot of pensions. Not that many people have pensions anymore, but there's a loss there and there's an expense. Many retired people that we work with, they're in second marriages. So their kids have different parents, okay? And it's her kids, my kids, and a lot of them, maybe some of them have our kids, but many of them don't. And over time, these become all of our kids. Most of the folks we do retirement planning for don't have enough money to leave money at the first death. So this creates, I point this out to people, that all the money generally needs to be thrown at the surviving spouse, who's the stepmother or stepfather of your kids. So one simple way to rectify this, and with a small amount of money, it doesn't need to be a large amount of money, but you can set up life insurance policies, and I generally recommend whole life for this, because this may not happen for many years, or you may be at an advanced age, so that when your children, by blood, would come to your service, certainly there's not going to be resentment for leaving everything to their stepmother or stepfather, but it's nice to have a life insurance policy where just part of it is named perhaps to all the kids. We have many clients do that, and there's a small payment, it comes quickly, it's tax-free, and that's generally whole life. So where it just depends upon what stage of life you're in. And many people that come to see us that are in their 60s, in their 50s, in their 70s, they have $200,000, $300,000, $400,000 worth of term insurance or work insurance expiring or expired, and then that's all term. And then many of them don't have a lick of whole life insurance. And then when we're doing the financial planning, we'll generally recommend that they get some amount, generally smaller than that, like 50,000 or 25,000 or perhaps 100,000 of whole life, which is much more affordable. And then the plan is to keep that thing in force for the rest of their life. Okay? So I'm Hans Scheil, and I thank you for listening.